Good morning and welcome. Patriot Radio News Hour. Joe and Jason on this Wednesday. I hope it finds you well. Yes, a new weather term. It's a heat dome. Yes. It's called summertime. I don't know. It gets hot, but yes, 34 million Americans are under the heat dome. We're under it. I'm going to be, like 110 today, 113 tomorrow. But then it's going to cool off. It gets better after that. But let's face it, we live in the desert here in Arizona. Stuff gets hot. So, but yeah, I love all these new terms that they like to create. Like, it's just... I'm sure all the global warmists will be out in full gear here. I got news for everybody. It's just cold weather. It will be okay. Find the AC. Leave the drive into us today. 800-951-0592. That is our toll-free number. The physical delivery of wealth insurance. Gold and silver, it is what we do. allamericangold.com is the website. Check it out. You can shop there 24 hours a day, 7 days a week. We put articles up pretty much every day for you to be able to educate yourself on what's going on in the world and things that you'll need to pay attention to. Yesterday, it was, softening of job openings. Today we got the ADP payroll numbers, and it was 125,000 jobs created with ADP. That's the lowest level that we've seen this year, and a little bit surprising because, this is a May number, and typically what we see in May, we see the summer hiring. Right, the resorts, the pools, right? You got to have the lifeguards, right? You got to have all the seasonal stuff, ice cream shops and things like that in the touristy areas. We didn't see it. Did not see it, at least in the ADP number. Remember, so tomorrow we'll get jobless claims. Can we get above 230? I don't know. It's been hovering now. I guess it's gone from 210 to 220, but nothing huge. Then, of course, Friday we get the government numbers. But you know what, Jason? It didn't appear like they even cared what the number was. They wanted to they were worried about wages, right? How much more are people having to pay for wages? And in this number, obviously, like we said, the number was lower. They were expecting, somewhere in the 150 to 180,000 range. But the big thing they really cared about was what about wages? And this was the exciting news. Ready? If you changed jobs, so in other words, I can quit this job and get a better job. You only got a 7.8% raise by switching jobs. That is the lowest number, it's first time below 8 in a while. Now, last month it was 8%. Now it's 7.8%. But you kind of see what I'm saying? If you've got to pay them 7.8% more, how in the world is inflation, only 3%? It's not, right? That dog doesn't hunt, right? People don't pay workers more just because, right? They don't pay more just because. Walmart doesn't pay more just because, right? Now, how about if you stayed in the job? That was unchanged at 5%. That was the third straight month in a row that number has stayed at 5%. And, of course, we'll wait for revisions. Usually they get revised lower. But I guess, Jason, that has Wall Street at least saying, see, right, we can start cutting rates soon. Inflation, it's getting better.
That's the hope, isn't it, Joe? Because, if you want a lot of cheap money to push your investments, then you need the rates to go down. You need those rates down. You want the casino to start back up. It's kind of clunked a little bit lately, right? It hasn't quite been what they want it to be, and you can't just wish away inflation. You just can't. It doesn't matter what they say. You just can't wish it away. You got to do specific things to make inflation go away. And if you really want inflation to be gone, you run an honest money system. We haven't had that for over 100 years, and don't see it coming back anytime soon. So Wall Street's going to have to they're going to have to deal with the situation that's in front of them, Joe. They're coming to a day of reckoning, I guess, right?
Well, and Janet Yellen is out now saying get ready for more short-term debt. Already now, short-term debt over almost 22% of the, where are we? Almost at $30 trillion now of what they say is public debt. In other words, if you take away, I guess 28, take away what the Fed owns, but over 22% of this almost now $30 trillion has to be rolled over every year. And Republicans are now saying, hey, wait a minute. Why would we sell a 3-month bill at 5.4% when the 10-year note right now is at 4.3? Why not sell 10-year debt and save a whole percent on the interest? Well, Janet Yellen says, don't worry, I'm not doing that to help President Biden. We don't do that. I'm going to tell you why they're doing it. Because she knows, as well as the rest of us, nobody's really interested in buying U.S. debt for 10 years because they know what's coming. Hey, I'll buy it for 3 months. 10 years? No thanks. We'll be back. 800-951-0592. Patriot Radio News Hour. Joe and Jason here on this Wednesday. A little dyslexic there. I said 125. It was 152. 152,000 jobs created. That was down about 36,000 from the previous month, and the lowest number of jobs created since January. Quick look in at the markets. It's mixed. The Dow's down today. Another one of those rallies late yesterday. After the Indian markets, right, had to take a timeout. The S&P and the NASDAQ are higher today. Why? Well, the 10-year note down to 430. But guess what? We're not going to be selling a whole lot of 10-year notes. Why? Well, I just told you why. Because nobody wants to buy them. Oil's up 10 cents. Remember gold took it a little sell-off yesterday? They've taken it all back and then some. Right now, gold's up 27, 23.52. Silver, here it comes. Right now, July silver up 40, back above $30. So again, those silver eagles, it's an outright buy right now. We've got a great gold price. Matter of fact, probably the best gold special that I've run maybe ever. That's coming. So be ready for that. Get ready to dial here. As we look at all of this, there's a new warning out. This time, Goldman Sachs is saying rate cuts are definitely coming. And they're coming sooner than you think. And it's nothing to do with inflation. Uh-oh. But before we talk about that, get diversified here. I'm telling you, get diversified. Think about this. Listen, your stock portfolio, it's had a nice run. It has. And it should, right? I mean, think about it. Think about what we're doing with our debt. I mean, we're talking about debts doubling like every 8 years. That's crazy. Crazy. I mean, what is the debt going to look like in 2030? Be honest. What is it going to be? What is it going to be? 60, 70 trillion, 80 trillion? I mean, we're back now, right? The debt bomb is back. Janet Yellen knows it. Over $1 trillion now. Over $1 trillion now every 100 days. Get diversified. You got to have your gold. You got to have your silver. You don't know all that. But what about your other stuff? Check out YRefi. Why? Because you can get up to 10.25% fixed rates of return. Listen, I don't think you're going to see 10% after, the year of chaos, maybe the year here this year, maybe you get 10 in Wall Street. I don't know. I think it's going to be a long time before you see those types of returns again. That's just what I think. Check them out. You can use it as income. Right? How nice would that be? Hey, you know what? I'm going to supplement my Social Security. I'm going to supplement my retirement. And you can compound it. You can do whatever you want with it. It's not correlated to Wall Street, and it's fixed. That means it doesn't change. It doesn't matter what happens. What if I'm wrong? You still get 10.25, right? That's not too shabby, right? But if I'm right, hello, check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-YRefi24. Now, having said that, Goldman Sachs. Now, granted, they're all over the place, right? They're in all of our government everywhere. Matter of fact, I think the Cleveland Fed, Metzer, she's stepping down. It's a Goldman employee that's going to take that job, right? They're all over the financial world, as we know. Said that the path to near-term Fed cuts is more likely to come from a deterioration in the labor markets rather than from the inflation side of the mandate. In other words, remember, they've only got two mandates. The Fed. I'm talking about the Fed. Full employment, which, by the way, anything under 4% is full employment in their eyes. So we've had full employment now for, I don't know how many years. Stable prices is the definition they use, stable. Now, stable, to me, would mean your purchasing power would remain the same. Jason, doesn't that sound like stable? Right? Hey, yeah. Every time I go to the store, I buy the same stuff, and it costs me the same. That's, I think, most people's definition of stable. Right? When they say a patient's stable in the hospital, what does that mean? That means their condition, it's not getting worse, right? They're stable. They're not going to die. Well, in the Fed's eye, that's not what stable means. Apparently, to them, stable means that you lose 2% of purchasing power. And then if it gets above that, they're supposed to fight it. Now, we've gone a year, right? Because remember, July was the last time they raised rates. So here we are in June, right? So we're coming up on 1 year where they've done nothing. And yet, the fake inflation is still 3%. I just told you they're excited that wages are only up between 5 and 7.8%. Look, oh man, we're doing great. But now Goldman's saying, hey, it's going to have nothing to do with inflation. And by the way, they're not alone, because Jay Powell himself says that is going to be the reasons. And then they talked about the JOLT survey from yesterday, the job openings now just plummeting hundreds of thousands a month. Then in March, the Philadelphia Federal Reserve said, oh, by the way, payroll numbers have been overstated by 800,000 jobs. I don't know. Right, Jason? How do we know? We should know. It should be pretty simple. Right? You want to know how many jobs are created? Look at how many more people are paying into Social Security, right? Who's getting hit with the FICA tax? It should be a pretty straightforward thing, but they never, ever want you to know the real numbers. Just remember that. According to the Philadelphia Fed's latest estimate. Hiring will fall below zero in October, according to this report from Goldman Sachs. So that means, like I said, on Friday, the government were expecting a jobs number somewhere around 200,000. According to what the Fed is doing in Philadelphia, apparently they're in charge of this. Jason, they're saying that job growth will go negative by October, which means first, right, you got to see, right, this job growth start falling, right? You know, below 200,000, below 150, below 100. And essentially, they'd say by October, we're going to have negative job growth in the United States.
Well, that's what a recession would look like, right, Joe? We're not 2 quarters away, I guess. I mean, October is kind of getting to the end of the third quarter. But I guess we're not going to have negative GDP growth this second quarter, I don't believe. So, but that's how a recession looks, right? No hiring. You know, this is how many times have you said if the jobs go away, that's when they can cut rates. Well, maybe sometime between now and October they can cut their quarter point rate, yeah. But I don't
targeting September. Yeah,
September. Okay,
that's what they're targeting. They're targeting September, saying that jobs in July and then in August, and obviously they'll get one more, that first week of September is going to be at or near zero before going negative in October, but saying that the Fed looks like they're going to cut rates in September. And then there's been a lot of detail behind. They expect major revisions to job growth. We'll see. I don't know. I don't care. But remember, I told you, this is the only way inflation comes down. People got to get fired. That's it. That's how it's going to happen. Then what happens? Money printing will come back, and that'll be the problem, right? Inflation won't fall like it should because these jokers are going to be printing more money. Get ready. So we've been talking about June, right? Starts the debt super cycle again. Jason, what was it? A week or two ago, we talked about August. August, I think we're going to see a lot of buildup and a lot of pressure on the Fed to start cutting rates because, you know, we've got a multi-pronged problem. If employment finally does start to buckle, which it's slowing. I think it's slowing. All of my buddies in the business now say, hey, guess what? I'm really not having a hard time finding people. Right? That was a problem. It really isn't anymore. And it doesn't matter. The crappy job, the good job, doesn't matter. Then we've got bank problems. And that's, Jason, what we're going to talk about next. You know, last week we told you about the FDIC's problem bank list. Today, we got more color from the FDIC. Remember now, there's 63 banks that they say are a problem. And now that number's doubled since last year, right? So that number has doubled. But we're now finding out that there's another 67 banks that are also at high risk of failure from an analysis from Florida Atlantic University, and saying that every quarter the Fed's problem bank list, get ready for dozens of banks to be added to this list quarter after quarter, because they're saying the amount of exposure to commercial-backed real estate, over 6 banks that aren't on the problem bank list have greater than 300% of their total equity in commercial real estate. How did they not make the list to begin with? That's just crazy.
I still remember last year when we got some information from the Fed. It was backdated to it was 2022 third quarter, and the Fed said there was 1,200 banks at risk of failure back in 2022, Joe. So what you're saying now is what you're showing is the ones at the top of the list, but that list could be way deeper than just a couple hundred banks, Joe. I mean, that back in 2022, they were saying 1,200 banks at risk of failure. That was on their internal studies, and that information came out in 2023. We were on the radio last year, so I think that list is very deep. And I think what you got is, I guess, the first round draft picks of bank failures is what you're looking at, Joe.
Yeah, and think about this: the deposit levels. Remember when Silicon Valley and Signature went under? Right? The deposit levels today are significantly less than where they were back in 2022 when those banks started having trouble. So that's another thing when we talk about what the by the way, the FDIC data, there was 4,036 banks that were, are real banks. And then I think there's like another 500, 400 maybe fake banks, that I call them fake banks. They made them banks, but they're really not banks. So we're just down to 4,000 banks. And when we start looking at what we're talking about here, just between now and the end of the year, there's another $1 trillion of commercial real estate that's maturing right now. The investors are getting their butts kicked. The banks are on deck. Patriot Radio News Hour, maybe the best gold special ever, coming up next.
Are you looking?
800-951-0592, Patriot Radio News Hour. Joe and Jason here on this Wednesday. In honor of the Heat Dome, we're going to heat up the pricing for everybody today. Well, first, let's start on the silver side of things. Yesterday we had that big pullback in silver. We told you, buy the dips. Well, you can. Silver's up 40 cents almost right now. Spot silver now $29.81. U.S. Silver Eagles at $755 a roll. I mean, that's rock bottom pricing anywhere you look. $755 a roll on a roll of 20 U.S. Silver Eagles. If you want the monster box, the 500-ounce green monster box, $18,750. Remember, that's like thousands of dollars less than it was a week, almost $2,000 less than it was a week ago. But that's a great deal for all you silver guys. $20 gold pieces today. Gold's up right now, $26 and change, $23.52. $20 gold pieces, less than $100 over spot at $2,450, right? That's like less than, a lot of places sell bars for. $2,450. Any quantity. You want to buy one, you can buy one. You want to buy 100, you can buy 100. For those of you that want saints, you can ask for them, but it's our choice. We will fill as many. We don't have nearly as many saints as we do liberties. But Jason, really doesn't matter. $2,450. And guess what? Gold's now up $28, so $23.53. $97 over spot. That's unheard of out there, and especially the most private way to own gold. And think about this. We've got debt problems. Janet Yellen knows, it's got to be more short-term debt. They break their own rules when they want. See, they had a rule that they only wanted 15% of the debt that had to roll over to be short-term. Why? Well, because it rolls over so fast, right? I mean, that makes sense, right? Let's make it roll over slower. Then they said, well, 15 to 20%, right? Now they're already at 22%. And Janet Yellen is telling everybody, by the way, come on. Yeah, we're going to sell a lot more short-term debt again. And there's only one reason for it. I get what the Republicans are saying. Why would we do that? Why would we pay more in interest than we have to? Because nobody wants to hold U.S. debt for that long. And think about this. So we got that issue. We've got Goldman Sachs and now others saying, hey, get ready. This job market finally, it's soft, but it's going to get softer, and almost saying, hey, September, we're probably going to get a rate cut, not because inflation's better, because, well, the employment situation's gotten worse. Jason, this is going to be much higher gold prices, much higher silver prices. This is a huge opportunity today for anybody out there that has the means. $20 gold pieces, $2,450 at 800-951-0592. Back it up with some rolls of Silver Eagles at $755. And Jason, you're on your way. Gold's now up 30, $23.55. The deal just gets better the more I keep talking.
It's always great to get metals at a extremely cheap price, which is what this is today. And if you've been holding on for whatever reason, or if you just came into some money and you're trying to figure out what gold to buy on what day, this is a really good day to jump in. Silver, the fact that we're keeping the silver special from yesterday up, with silver going up, is silver is not going to stay where it's at. Look what gold and silver has just done in 2024. Of course, it's going to take a breather. Anybody that thinks that gold and silver is just going to shoot up, I know those prognosticators talk about gold and silver doing these obnoxious things, which I guess could in certain circumstances. But we're talking about gold and silver going up regularly at a faster tilt. It's going to happen, but it's not going to happen every single week, every single month. So jump in on this one, right, Joe? Jump in on this one. Silver at $7.55 a roll for Silver Eagles is a great way to jump in. And the $20 gold pieces, if you haven't bought a $20 gold piece, if this is something you've been thinking about getting, today is really for 2024. This is the day this year to do this.
Yeah, this will be the best price for sure here. And here's the funny part. I was just talking to Jason about it this morning. Gold was up like $10 when we said, yeah, let's do it. Now it's up like 30, right? I mean, it's crazy. Silver was up 8 cents when we talked about let's just leave it there. Now it's up 40 cents, right? So this was going to be a great deal to begin with. Now it's just turning into one of those things where, you know what, at the end of the day, it's pretty simple. What's going to happen? Well, Jason and I make less, right? We're already, you're talking about, 4% over spot? I mean, give me a break. That's crazy type premiums that you would see, like kilo bars and stuff like that you'd get that low of a price. Take advantage of it. 800-951-0592. And I find it very interesting that we're talking about problem banks, senators or Congress people trying to say Janet Yellen selling short-dated treasuries to boost the economy. No, I wish that was why, right? Obviously, it does have a certain effect. What effect is it? Well, we're going to sell less 10, 20, and 30. I mean less. They're going to sell more of those, right? Because they have to. But it could be a lot more of those, and that's what they're not doing. Yes, does that mean the 10-year note will be lower because you have to sell less of them? Sure it does. But the real reason, Jason, that we're going to have this issue is, let's face it, most of the world says, I don't want to have to hold on to that for 10 years. Look at what's happening to the point the central bank, the Fed, had to issue a statement about countries turning away from the dollar. They issued a statement yesterday. I'm going to share it with you. This just tells you, if they've got to address it, there's a problem, isn't there? Patriot Radio News Hour. We'll be back after the break. $800-951-0592. Gold's up 30 and change here, 23.55 on gold. Silver's up 45 cents now, 30.07 in the July contract. The spot price now 29.80. It's going to, as it catches up here, 29.89. On silver. So, again, it seems like the longer we go, the better. This is the deal of the year. I'll call it the Heat Dome Special. $20 gold pieces. Now $94 over spot. Gold now $23.56. $2,450. On a $20 gold piece. You can ask for Saints. We'll fill it. We'll give you as many as we can, but otherwise, Liberties. Either way, you're going to get a $20 gold piece for $90-some over spot. That's just unheard of. And then, of course, U.S. Silver Eagles, another great deal here. $755 a roll. If you buy a case of Silver Eagles, save another $5, $18,750. So it'd be $750 a roll if you buy it by the case. Of course, the case is 500 ounces. Our toll-free number, 800-951-0592. And now, listen to this. Money-wise, 46% of middle-class workers are cutting out their contributions or slashing or cutting out their contributions to their retirement accounts. Jason, are you middle class when you say, hey, you know what, I can't stay in this retirement account. I don't have enough money, because that's why they're doing it. It's not like they're doing it because, well, gosh, the stock market's terrible and this and that. No, they're out of money. Half, 46%. I mean, that's half.
Lots of people running out of money these days, Joe. Lots of people running out of money. That's just, unfortunately, that's actually how it's designed. Let's face it. When the Federal Reserve got its banking powers, its money creation and setting the interest rates, they rolled the federal income tax right in next to it, right? And the federal income tax doesn't pay any bills. It's supposed to pay the bills. It doesn't pay the bills. Printing money pays the bills. Federal income tax is to keep the average guy stuck right in the spot he's supposed to stay in. And there was a lot more opportunity for people in the 19-teens and 20s, even with the Depression. After World War I, World War II, there were still opportunities, but how quickly it was getting harder and harder to make a living. Every single decade, it's gotten worse and worse. In 2024, Joe, most young people, I don't think, have a clue, even if they know what they want to do, as to how they're going to make ends meet in the future, Joe. It's gotten obscene where the middle class doesn't really exist.
The rich getting richer. I mean, that's kind of what we're talking about here. The strain is worse now. 67% that say they're middle class say their income is falling behind the cost of living. So remember what ADP just said. Wages went up between, if you stayed at your job, 5%. If you left your job, 7.8%. And that's apparently good news. And yet, 67% of people that say they're middle class are saying, listen, I've got less money now than I did last year. Even though I got paid more, I still have less. At the end of the month, I've got less. And this is kind of what we're talking about here, Jason. And, man, if this is right, we'll see. I don't know. We need more proof but it does appear that the job market has softened. We know what's going on in the retail and the restaurant industry, right? Those what I would call middle to lower middle class and beyond establishments all struggling, right? Because their customers are tapped out. And now we're finding out half of the people that say they're middle class, Jason, got to stop contributing to their 401ks.
Yeah, you can't be middle class unless you got savings going in somewhere, right, Joe? You got to be able to save something. To me, middle class is the bare necessities are easily taken care of. I think that's middle class where you've got savings. If you get laid off, you can casually get into the next job and not miss a step. I think that's middle class. And I don't think there's a lot of that left, Joe. There's not a whole lot of that left. Just not.
Yeah, you know what? Isn't it great how they are trying to redefine what middle class will be now? They like to define it by income. I love Cardone. You ever see what he talks about? He's a big, billionaire type investor, Grant Cardone. He was out saying that if you're a millionaire now, you're basically middle class. Right? That's kind of what he's saying. Hey, you're basically middle. And that may be a little bit of an overstatement. But, Jason, not much. Remember, it used to be, man, you made $100,000. You were, not only were you middle class, right? You were upper middle class. Now, dude, you make $100,000 in Arizona, dude, that's nothing. That's nothing, right? You're not living in Scottsdale. You're not living in PV. You're not living in the Biltmore, right? You make $100,000. Yeah, you're way out on the west side, way out on the east side, right? And probably driving 50 minutes to work every day. That's what's happened. And now you got to stop contributing to your 401k. Patriot Radio News Hour. Get that gold put away. Heat it up. The heat dome is here. We'll be back. (800-951-0592) Patriot Radio News Hour. Joe and Jason wrapping up the hump day. Remember, we got jobless claims tomorrow. I think they'll get excited at anything over 220,000 people having to file for unemployment. If we get over 230, oh boy, they'll be really excited. It's kind of sad, isn't it? Yes, we want people to lose their jobs. And now Goldman Sachs and others now saying, get ready based on what they're seeing and reports out of the Philadelphia Federal Reserve. Could job growth go negative as early as October? All of these things to keep in mind, but this is the Heat Dome special. $20 gold pieces, $2,450. If you have never bought gold from us, this is the 1 ounce gold coins pre-1933. A lot of people think, oh my gosh, pre-1933, you get a $20 Liberty and it's from, 1885. And it's so funny because people don't really understand gold. You won't believe how good these coins look. You won't believe it, right? Gold. It's really incredible how well gold holds up and can look. You really got to work hard to damage these coins. So, every once in a while, because the minting process wasn't great, they had some copper in it to give it hardness. You may see a little copper spot on a coin here. That doesn't happen very often, but every once in a while you'll see that. But otherwise, Jason, it's just like what we call bag marks, right? They get dinged and dented. Think about 1860s. There was no cars. There was no freeways. Right, this stuff was drove around in stagecoaches in big sacks with thousands of coins in it, bouncing up and down. But it really is. These coins are incredible. What a great piece of history and what a great opportunity. We're just proud to do what we do here $2,450 at 800-951-0592. And then, of course, the Silver Eagles, $755 a roll. If you buy 25 rolls or more, we're going to take $5 a roll off at $750. 800-951-0592. And Jason, I guess we'll see. We'll see what jobless claims look like tomorrow. And just remember on Friday, the lower the jobs number, the better you're going to see. Right? Again, it's kind of a weird time. They actually want job growth to get worse, not better.
That's right. So they can help all their buddies out by lowering rates and spend. And for whatever reason, these guys think the markets are just going to go to the moon and never come down. But there's some serious stuff getting ready to go down in the next months and the next couple of years. And I think the average guy out there is feeling it. They just want you with their television programs just to ignore it, right? Ignore it. Oh, no, it's okay. Yeah, I know the prices are up. Don't worry about it. The government has a plan for you, Joe. Go ahead and listen to the government if you want to.
Yeah, that's all right. Canada today lowered rates, so they're the first. I guess are they part of the G7? They may be a G7 country, but they lowered rates 1/4 point. Europe is expected to do the same thing at their next meeting. So, again, usually they all work in concert, don't they? So, yeah. Do they know something we don't? Probably. 800-951-0592. Get that gold put away. Jason and I, we're coming right back with the Half Empty Cup.